Recently, I took part in a very informative and interesting webinar organized by our partner, Mortgage Direct, the broker company which we recommend to our clients who are interested in buying a property with a mortgage in Spain. They were kind enough to let us share this presentation with you. Bozena Brunowska, mortgage advisor in Mortgage Direct, will explain you the details of mortgages in Spain.
In today's presentation, we're going to cover subjects like types of mortgages, deposits required, how much you can borrow, what interest rates are available, types of income, how you can prove your income, cost of buying in Spain, how much cost of buying, buying process, how we can help you, our charges, and also what's the current situation in Spain. So types of mortgages available. We have the normal residential mortgages that are available obviously for Spanish residents. We have the holiday home. So if you're looking to buy your property and use it for your holiday, but also you want to rent out the property, that's not a problem. We have the investor loans, commercial loans, construction mortgages, self-built projects, so plot and land, short-term bridging finance for SL companies. So how much deposit do you need? The deposit very much depends on how you receive your income. If your income is in euros, you need to put down 30% deposit. If your income is in any other currency, you need to put down 40% deposit. Saying that if the mortgage amount is 100,000 plus, you can still obtain a mortgage at 70% loan to value. There are not many banks that offer that service anymore, but it's possible. For commercial lending very much depends on the types of what you're trying to do, the project. If the banks like the project, they're very often willing to make better offers. But as a general rule, you need to put down between 40 and 50% deposit, and the maximum term is 15 years. Again, it very much depending what you're trying to do. Like I said, if the proposal is very attractive to the bank, then they're willing to negotiate those terms. So how much you can borrow? This is perhaps the most important part of this presentation. The ability to borrow in Spain very much depends on your debt to income ratio. As a general rule, the bank will allow you 1/3 of your income to cover your current financial commitments plus your new Spanish mortgage. Some banks offer a little bit more, so some banks will go, let's say, 1/4 of your net income, but it's not many of them. So on average, we use the 1/3 of your income, and I will explain that by the example on the next page. So, sorry. So we're looking at the example here. We have Mr. and Mrs. Smith looking to borrow 100,000 over 20 years, and the repayment on that mortgage will be in the region of 510. Just to clarify, for simplicity, we didn't use different currencies. We're going to keep everything in euros. So Mr. and Mrs. Smith, net income is 3,000 per month. They have current commitments, so it's the mortgage of 390 per month, and also the car loan at 120. We're going to look at two banks, Bank A and Bank B. Bank A use 30% debt to income ratio, and Bank B use 40% debt to income ratio. So if we look at the calculations, 30% of the 3,000 with Bank A is 900 euros. What it means that within that 900 euros, that has to cover the current commitments plus the new Spanish mortgage. So if we look at the calculations, we have 900 euros, the disposable income, minus the existing mortgage of 390, minus the car loan at 120, minus the new Spanish mortgage. So as you can see, the line below, we end up with negative figure of minus 120, which means Bank A will reject this application. However, if we look at Bank B, we have 40% of 3,000, it's 1,200. If we deduct all the expenses, so the current mortgage, the car loan, and the new Spanish mortgage, we end up with the positive figure of 180, so it's still disposable income left, which will mean Bank B will approve this application. Current interest rates currently available on the market. Just before I carry on about the interest rate, as you've seen on the video, due to the volume of business we submit to the banks in return offers us preferential interest rates. So the interest rate that you see on the screen are specific to Mortgage Direct. Also, excuse me, well, the interest rate depends very much on the debt to income ratio, and also whether you take out any additional products. So additional products, I mean life cover, building insurance, home insurance, pensions, investments, house alarm. So for every product that you take out, the bank will give you a discount. The rates that you're looking here, they are with no additional products. So if we look at 20-year fixed, if for instance, you took out a life cover, your interest, you can change the 20-year fixed rate from 2.49 to 2.09 because the bank will give you a discount. With regards to rates, variable rates, we all know how they work. They go up and down. The payment is not guaranteed, so you never know what you're going to pay. With the fixed rates in Spain, you can get a fixed rate for 10 years, 15 years, 20 years, 25 years, which means that rate, that mortgage remains fixed for the duration of the mortgage. So what type of income is acceptable? So obviously the employment income, this is, bank's favorite. With employment income, that includes the salary, bonus, commission, and overtime. The bonus, commission, and overtime is a fluctuating income, which means certain banks will take only a certain percentage of that income into account. For the self-employment, that's the salary, dividends, whatever other income that you have. The rental income is acceptable. A pension income is acceptable. What is not acceptable is child maintenance and social security benefits. So how can you prove your income? For the employed applicants, the banks usually want to see the annual tax statements. In UK, we call it P60. They want to see pay slips and the work contract. For the self-employed people, we're looking at tax return, invoices, perhaps an engagement contract that you have. For limited companies or owners of limited company, where you receive your salary, you're paying yourself salary and you're drawing out the dividends, the banks will want to see the annual accounts for the company and also your personal self-assessment or tax return. For the rental income, the banks want to see the tenancy agreements, proof of property ownership, pension income, so it could be a tax return, annual pension statements. In addition to all of the above, the banks also want to see the bank statements for the last, on average, between 3 to 6 months as an additional proof that the income's been received into your account. So cost of buying in Spain. In this scenario, we're looking at the property purchase price of 200,000. The cost of buying in Spain is between 9 to 13% of the purchase price, depending on the region where you are buying. So if we look at this example, the property costs, you would have the tax, which is between 6 to 10%, depending on the region. You will have the notary, custodia, registrar, and all other costs, which would be about 1,200. Again, depends on the region. The solicitors usually charge 1% plus VAT. So in this scenario, we look at 2,420. The mortgage costs, we have the bank arrangement fee, and that very much depends on the bank. It could be from 0 to 1.5%. And also the valuation, which is around 400 euros based on the purchase price of 200,000. So what's the buying process? Usually once your offer is accepted on the property, you will be required to pay the agent a holding or reservation deposit. That could be few thousand euros, and is usually a non-refundable deposit within agreed time scale. So it could be, again, it depends on the agreement. It could be 2 weeks, it could be 1 month. You will be required to pay 10% of the purchase price additional deposit. Again, that fee is non-refundable. So we strongly advise you to get the mortgage pre-approved before you sign any purchase contract, because otherwise you are at risk of losing your money. So how we can help? We calculate your debt to income ratio to start with. Once we know what your debt to income ratio is with the new Spanish mortgage, we know which bank we can approach. So we go to the right bank first time. As part of the pre-approval process, we open a Spanish bank account for you. We monitor the whole process from the start to the end. So from the day when you sign up for the mortgage right until the completion day, we resolve any issues, any problems you might have. We work with multilingual branches, which means in many cases, your documents don't have to be translated. And of course, the most important one, we can arrange the pre-approval of your mortgage before you fly to Spain to view the properties. So what do we charge? We charge 1,495 euros, which is split into 2 installments. First is the administration fee of 495 euros, and that's payable with the application. This fee is covered under money back guarantee, which means that if the application is declined and we are unable to find alternative lender, the fee is fully refundable. Once the mortgage is approved based on your financial situation, so once we submit all the documents to the bank and we get a positive answer from the risk department, we charge 1,000 euros. Our fees are per property, which means that if you find the property that you are unable to proceed with for legal reason or any other reason, and you need to find alternative property and we need to resubmit the application to the bank, we do not charge again. So what's happening currently? Well, we all work, although we work from home. So the banks, the risk department, the solicitors, the notaries, everything is working and operational. However, the time scale is slightly longer because everybody's working from home and people might not have enough time to commit to check the cases and do the approvals and check the documents. So please allow yourself extra time if you want to apply for the pre-approval. So thank you for watching. I hope your family and you are in good health. Please get in touch with us. We are here to help.
I hope you found the presentation helpful. Below, you will find the link to contact Broker Direct and Bozena directly. And additionally, I will attach a second part of this webinar, which was question and answer session.